then Berthold, we welcome you guys on stage, and I hope you and Igor will, and I know you will, take us on a very nice excursion for the next hour. And yeah, stay tuned.
Thank you very much. Big applause to our moderator. She does a great job, doesn't she? So guys, we have a split. There's the first part is the usual CEO talk, right, where some education happens, and then the detailed hits, and this is where Igor, who's not only our fund manager at Venionaire Web3, our crypto funds, but also the man behind the first ever PMR compliant crypto index made in Austria. We're quite proud of that, and this is basically also a tribute to DLT Austrian to Ed, because he said, we do this DLT Austrian event here. We have to have some launch. We have to have something big. So we brought you actually here the official launch of our first ever PMR compliant index. We have an index family planned, which is a little bit like Ricky Martin's little bit lookup. VIDA stands for Venionaire Index for Digital Assets. So VIDA, you will see there's more and more indices happening. But let's start with the reasoning or the topic, why index? Why do we need an index? Or why does anyone need an index? Right? We know an index from the Austrian Stock Exchange, German Stock Exchange, S&P 500 and whatnot from the equity world. Why is that? We also do know that literally all fund managers struggle to beat the benchmark. In crypto, there is no such thing as the real benchmark. Most people that manage a fund say, okay, my benchmark is Bitcoin. But Bitcoin is really not the best benchmark if you are in, let's say, a DeFi-oriented fund or in a gaming-oriented fund or in a certain sector, maybe a blend of sectors, because you have a certain conviction, you have a certain idea of the future. So also with viewpoints coming into the market, it becomes all complicated and there's more and more noise coming in. And somebody has to filter that out and give you an idea where's actually the market going, where's the sectors going, and how does that work. So we try to basically help you from a TradFi perspective, right, to simplify and narrow down the noise that you have in the market. And we want to enable you with our indices to build great products and allocate money for your investors under your brand. So as an index provider, we are basically giving you a resource where you can make business. In a blend for traditional assets and crypto assets, what we will do, obviously, is we provide you an index based on digital assets, but these indices are designed in a way that you can actually structure securities, so traditional financial instruments, and you will get them approved and you can get them listed on exchanges. And this is incredibly difficult because in Europe we have, funnily enough, also indices regulated. There's something called BMR, benchmark regulation. And the benchmark regulation basically says you cannot just issue an index. We want to have a trustable source from the data. We want to have a trustable administrator. And that has to be a supervised entity, right? Because we need to trust the data that you give us. Because otherwise you could tell us something that might be wrong, right? So you could steer the market a bit. Now we all know that also this single source of truth of the real data point in the market is something that is really true. So these data providers are available, but extremely expensive. So it's not really easy to find somebody to partner with to actually have a high quality index that you can launch on. Now, there is a few things, right, that we want to tackle with this Venionaire index of digital assets with our index family. On the one hand, diversification, much more than a basket. Transparency, you should always know what we are invested in. Right? An index always says what are the constituents and when happens rebalancing, right? What was in the rebalancing happening, and you can backtrace that. So you're always in full transparency of what happens. If you use it as benchmark, you know what you're benchmarking against. It's not some fund where a fund manager decides on whatever gut feeling. There's a rule set. We have it standardized, we have it liquid, we have it ready for adoption with good risk management, seamless integration, and operation efficiency. What that means is plug-and-play solution with partners that you can build products, traditional financial products based on indices. Now, there is a lot of indices, right? We have all these consultants always have these quadrants. My team loves that as well. Nice charts. And the cool stuff is always in the upper right. So obviously either like 0, very upper right. What we do as a differentiator, we have it sector-based. So what we are doing is we're basically narrowing down what is the truth, right? What is the best quality in each sector in crypto. Starting point is one very obvious one, very liquid one, the layer ones, right? So we select the best layer ones. More on that in detail from Igor, who designed that. There is others that do obviously also good indices, right? We have seen that 21 shares here in the room, right? The baskets quite early in the market. I would say somebody that was pioneering, right? It's always 21 shares, but they're also partnering with other index providers and making products based on indices. If the index is good, and if it has a differentiation to what they already have. So all these different partners that you have certain advantages, disadvantages, etc. We want to do a monthly rebalancing because crypto is fast and we're effectively doing monthly rebalancing. And we have some requirements that we need to really care of that these products again are eligible to be listed as a security. Now, such an index is a bit complex, right? We dive into this. There's a lot of things we have to do. So first, we have to have a universe. What kind of assets for this index could be theoretically included? So we need criteria for this universe because it will change over time. You write an ecology today, but it should hold up the next 10, 20 years. Then we have the index constituent selection. So who's actually in the index now in the current month? We have the listing duration requirement. So they have to be liquid, they have to be on the market, etc. Right? So there's liquidity requirements, market cap requirements, etc. Further, we select this, narrow this down, right? With these algorithms and weightings. And by the way, everybody can read the methodology. It's fully published. Yeah? We will show you well. The index weightings and calculations have a human in the loop. Because in crypto, there's always something that you as a human will know, right? Additional intelligence that data doesn't tell you. There can be a protocol that is doing incredibly good, but you know that, let's say, the key developers have left. Yeah? Or there's certain things that happen in the market where investigations might start, right? Or government has a problem for whatever reason with the setup of the company behind the circle. This is stuff that humans have to do, right? To qualify if what the data tells us is right, they can correct. But with a committee. So it's not one person deciding on that. Even here is the mechanism, and this mechanism is transparent, and also the people who decide are transparent. Then we have the constituent pricing, so we need to get data, right? We have the input price, put all of that together, and then we have a market cap index calculation that basically in the end forms the index. The first one, this is the launch moment, is Venionaire Layer 1 Select Index. That's the first one we brought live on the 1st of September. It was listed in Representative and in Bloomberg. And obviously also at Compass FD, our index administrator and data provider partner. Venionaire serves as an index sponsor and promoter. So we basically try to promote our index, find banks and other partners, wealth managers to build products on top of our index or software solutions to use our indices as benchmarks. I know Ed is working on software, right, for traders and something like Bloomberg for crypto. It's always how I remember it. If he wants to have a great quality in benchmarks, he could list our benchmarks. He would become a licensed partner of this index and could use this data. And it's verified third party, right? Not fraudable, etc. So in the first index, it gives you a bit of an idea. This is in the layer 1, what we have as an excerpt for the constituents. Now, there can be certain things happening, right? Forks, deletions, and etc. And all of that gears into the rebalancing, right? So every month we're rebalancing. It's not like trading all the time, but there's a rebalancing habit. There's a good reason why custodians and asset managers in crypto love indices. Because in crypto winds, usually what you see is less trading activity. But if you want to keep the trading activity alive, you want to have index investors. Because the index will rebalance and will trade every month for sure. Right? So there's a good, I would say, a good chance that indices will be adopted more and more also by crypto exchanges. Because you have a better diversified product with a lot of brains inside. And on the other hand, it's good and healthy economic wise for the brokers offering it. Now, how is the history and how did this come about? Our first fund, Venionaire Web3, the first Austrian crypto fund, we launched in 2020. It was only for qualified investors. It was a nightmare to explain to the Financial Markets Authority back then, right? That we want to make an alternative investment fund with 100% crypto assets. And still, until today, we don't have an Austrian bank banking with us. We have to go to the step for that, even though it's Austrian regulated fund. Then we came up with this speed up, right? Because we see this as an evolution step. And there's a very, very clear rationale behind it. We can have a much lower management fee, and we're talking a fraction of what a fund management costs, right? And we have a clear strategy that's fully transparent that serves as a benchmark where other fund managers will struggle to beat our performance. And they've shown that in the back test, this index performs not only better than Bitcoin, but also better than others. And the back test we didn't do so often, right, to try to beat it. We actually had the design of methodology and our data provider then ran backwards on the back testing. We had no chance to interfere. So this is fully transparent, really cool. Now, in Q4, based on our index, we will launch products. And the first one will actually be a decentralized product. Igor will tell you more about that. The super exciting department and startup where PTTs and Alpins, others are invested in. And this will be a product that will be officially launched and presented at Token 2049 in Singapore. Correct? Yes. So in Singapore. So quite soon. And I hope with 10,000 or whatever people in the room, the ETF will gain some traction and will prove that the product, right, that is just based on a data point can still be a profitable business for someone that has just made up their minds on it. So we believe it's even for us a great deal where we can make money with, and our partners doing the products at home obviously will also make a fair share of money. Like any other bank that wants to deal and work with us, we hope there's a few in the room where we in the future have also business with, and many other banks that we have spoken with throughout the last 12 to 18 months, when we learned how to set up such index that they can actually build products with us. What's to come is sector indices for DeFi, EcoSelect, real-world assets, DePIN, AI, gaming, some other topics, right? And this is one by one going to be launched, but we always launch an index. Then we help the first products to get to the market. We'll promote those. And when we see good enough traction, we'll launch the second index and do the same over and over again. This we will do 12 times. And likely during those, let's say 3 to 4 years, right, launching those 12 indices, we will come up with some more ideas and maybe even get creating towards staking and other things, right? There's some innovation around the corner where we hope also to be part of this development. So this said, you're the first crowd I've ever told this story to. You have an exclusive access, if you want, to this family, to this index family, and to the first one via an API access. Like said, fully transparent. You can read yourself through that. If you want to dive in detail, we will hear a bit from Igor. He will explain you everything about the Layer 1 index. And if you have questions on that, he's the architect behind this. And he will be able to explain you a lot about products and what's behind. So on the left, this is me without beard and with my own glasses. And on the right is Igor wearing a suit. Not today. Not today. But yeah, like I said, he's really the tech lead in Web3 at Venionaire. I'm super proud to be here, and thank you for letting me present Venionaire Index as digital assets. My contribution was only I wanted to have these indices, and the team did. And I'm super happy for that. And help me please to applause for him and his team. They did an amazing job. And now the show is yours. Thank you, Berthold, for this great overview. Hi, everybody. We already know what the topic is, so I'm just going to give you some short of the academy, maybe the insight in this methodology, the idea behind it, why we did it, how we did it, what benefits it brings. So I just want to start with this layer one opportunity as a title. Layer one is, protocols that are foundational layer for everything crypto. The entire crypto industry is based on those layer ones that are built for different use cases. But altogether, they are, I would say, growth engine of the crypto industry. And at the moment, there are over 3 trillion in market capitalization. Of course, Bitcoin is a big part of that, with some 2.2, 2.3 trillion. But nevertheless, you still have over 900 billion for L1 market specifically. And there is growing demand for professional exposure, of course. So the market is evolving beyond traditional wrappers towards native blockchain products. This means that traditional financial products such as ETFs, futures, or ETPs are not anymore the only way to get exposure to crypto industry. In the meantime, we also have something called native blockchain products that include also DeFi, variations of traditional products, but also some very, very creative and novel products, financial products that are only available within the crypto industry. So put that together, you have the opportunity to get exposure in two different ways, crypto natively and over traditional finance, let's say rails. And at the moment, there are over 30 projects that have at least 1 billion in market cap. There are hundreds and hundreds of different blockchains out there, literally without, exaggerating. But there are around 40 of them that are above 800 million. So, of course, as I've said, Bitcoin is a large part of that. But Bitcoin, although is very often used as a benchmark for performance when it comes to digital assets investments in general, it is not an ideal benchmark when it comes to potential and growth of this entire industry as a single unit. So the crypto industry nowadays, after some 15, 16 years ago, has two tracks. One track is that Bitcoin is digital gold. It is an asset class of its own. It is in a league of its own when compared to traditional assets such as gold or S&P 500. Bitcoin has outperformed for the past 15 years in terms of return on investments and CAGR year over year. So it is entirely asset, as I said, in a league of its own. So it's not really comparable to anything else. So anything else or everything else is blockchain technology. So I think that at the moment this classification is getting more and more pronounced, and we need another representation of blockchain's technology's full potential for a variety of other use cases that are, let's say, beyond Bitcoin's initial use case, which is let's say, payments. So this exposure to foundation of the digital economy has taken, let's say, a different course over the past 2 years, especially, and it's pronounced in corporate treasuries and strategic reserves. So corporate treasuries are racing to include digital assets in their balance sheets. It started, of course, with BTC and Sailor strategy. Everybody knows about that. But as of maybe end of first quarter this year, there is a broader corporate trend in increasing this exposure to the digital assets, so-called digital assets treasuries.
Of course, strategic reserves is also part of that, where governments and state administration is looking for ways to have direct and or indirect exposure to digital assets to capture this, let's say, potential, growth potential. Part of that are also sovereign wealth funds. And why is this such a success? It does come in part from ETFs, but it's a mutual reinforcing effect where this outperformance of Bitcoin that I mentioned earlier spiked the curiosity, and then people started learning about Bitcoin, and then eventually started or decided to allocate in one way or another. And this reinforced this increased exposure from a variety of usually only traditional players or traditional institutions. And today and tomorrow, I think this shift in a similar way will be necessary, where we learn about blockchain infrastructure in general, because it's the foundation of the entire crypto industry, and which will lead to some form of allocation and exposure to this foundational layer. So benchmark infrastructure, as I mentioned, market mature beyond Bitcoin only. And as Berthold mentioned, institutionals need a certain diversified benchmarks to have a, let's say, compliant point of reference. And it offers them also multiple access points. So it supports institutional allocation and trading strategies, because there are funds that just employ different trading strategies. Some are just long only, some are delta neutral. And our idea was then, how do I allocate to blockchain infrastructure beyond just, Bitcoin? So VLON or VL1 serves both those immediate trading needs via products like ETF, which I'm going to touch upon a bit later, and long-term allocation needs. So I have to ask also this maybe rhetorical question, perfect timing for L1 infrastructure exposure. Am I too soon? Am I too early? Am I too late? What are the indicators for the readiness of the market at the moment? Well, number one is this major change that we've had over the past roughly 10, 11 months, regulatory clarity and support. I mean, realistically speaking, 12 or 15 months ago, the number one enemy, if I may say so, of anything crypto or anything blockchain was regulation. And now this let's say entity, this situation took 180 degrees turn, and it's now becoming the biggest cheerleader, promoter for this novel technology and the potential it brings to society, to economy. And this is what changes the game. You have professional DeFi infrastructure that is being increasingly, let's say, connected, by terms connected to certain blockchains or blockchain-based infrastructure. Part of that is tokenization or stable coins that are just finding their ways for fintech companies to be part of this payment rail system globally. Narrative evolution, initially it was just like, okay, speculation, gambling, money laundering, criminal activity. This narrative has changed in part to this increased awareness and increased education about blockchain, starting with Bitcoin that I mentioned earlier. So this also supports this current new, let's say, development. And this educational awareness progress is continuing and is expanding beyond just Bitcoin. And I think it is very valuable because people are learning that there is so much more out there except just Bitcoin. So the VL1 advantage is that we are positioned for this everything else out there, this conversation. We have professional and unique methodology that is ready for institutional adoption, as Berthold mentioned. And we also have first, let's say, validated partnerships that I'm going to, of course, present later. VL1 is the next step, I think, in this institutional journey. In this sentence, digital assets with long-term fundamental qualities, what I want to emphasize, because long-term fundamental quality and relevance is something that is sometimes called a challenge, because the entire crypto industry can be also seen as a large experiment. There are so many ideas, so many products built that just crash overnight and disappear. And there is a large fluctuation of projects and ideas until something establishes itself as proven, as valuable, as worthy. And this is this relevance point that we are trying to reflect in our composition of the VL1. So, Berthold also thankfully mentioned that there are a lot of indices out there, but again, hundreds and hundreds of different indices, and they all have something together, which is market cap as their starting point, basis. And they all focus on top 5, top 10, top 25, or are equally weighted, but everything revolves around market cap. We want to go beyond market cap only. So we observe qualitative aspects as well, and we call this a hybrid quantitative approach. Just to give you a brief insight on our methodology, we have, of course, market cap as one of components, but we see that it is not the only relevant factor. It is thus capped at 15%. So volume weighted and time weighted prices are relevant for liquidity and performance metrics, because if a project has 3 billion in market cap, it might be included in some top 5 or top 10, but the performance behind it, the adoption, the, let's say, number of users or the DApps ecosystem built around this L1 project may be irrelevant or so small that's not worthy to include such project in a basket just because the market cap is high. We include this quality assessment with fundamental analysis. This quality assessment framework I will show something on the next slide. Those are the 6 categories that we find are relevant for L1 performance or assessment. So reaching them as a result gives L1 a hybrid approach that combines performance, liquidity, and expert analysis. So we are going beyond this market cap decisive criteria. If you want to make a basket of any kind of project, in this case L1s, you have to first be able to assess if a project is eligible to be considered at all. And then you have to think about it, how do you do that? So of course, those are some of major eligibility criteria. It has to be either smart contract functionality, let's say based on the virtual machines like Solana or Ethereum virtual machines, or just have a foundation payment infrastructure, such for example Litecoin or Bitcoin Cash, that do not have this programming functionality behind it. Quality framework is the next step. Would consider 1 billion as a minimum threshold for capital, for market capitalization, 100 million in rolling EMEA trading volume, exponential moving average on a rolling basis. Constituents, we want to not how to say it, we don't want to overdo it, and we don't want to underdo it, meaning if I only have, let's say, 8 projects, it might be too restrictive for other projects that are newer, that are growing, which will not include them. So the products that are So our partners that are crucial in this entire operation have to be, of course, compliant with with relevant EU laws, which is BMR regulation. And we found a very competent and experienced partner in Compass Financial Technologies. They are based in France, but also have offices in Switzerland. And our partner for a new version of, let's say, crypto native product that I mentioned earlier, reserved from the United States, is a specialist platform for for indices, DTFs, because there are three versions of DTFs, which are then accessible on all of those platforms that everybody knows. I think this is a big thing, but what the DTFs are, let's see here. Institutional partner. I think Berthold also mentioned that to have this set up properly functioning in a compliant manner, you have to have index administrator, index calculator, and data contributor to be able to launch an index and operate and maintain index. And this is what Compass does with real-time data distribution. And Reserve Protocol is a special kind of company from the United States that have invented something called decentralized token folios. The simplest explanation of what ETFs are is ETFs, but in a decentralized way, which allows you to have 24/7 subscription and redemption of units or shares of this, let's say, decentralized ETF or DTF. So at the end of the day, you do not need access to your bank account or your broker. You just need access to with your wallet. You need internet access, and then you can have exposure to this basket of selected, curated quality assets, which has immediate settlement. There is no settlement E plus 1, 2, or 3, which makes it, I think, a novel product. And I'm very proud to say that we are going to be the very first indexing company in Europe to launch our own ETF. This is happening end of September when we have the next rebalancing. All assets are backed 1-to-1, which is a big deal, I would say. Partnership models that we are offering right now is traditional products or licensing and something on this innovation track. Both are available. Those are the people who worked together, put their brains together to launch this product, to make it a reality. And it was a lot of work in the past few months, but I'm really proud that we have brought it so far and launched it in a very a clean way, and it's fully EU regulation compliant. Yeah, I think that's it for first part. If I took more time to, I apologize, but thanks.
Okay, to you as well, Eva. Definitely a very great opportunity, I think, also for any quick investments or investors. Some of them might be in this room already. Before we head into our last session or the last two sessions of this day, of the last day of the last few days, 3 days, we'll do another short break until 2:30, and then we have 3 more presentations and one last panel more today. And yeah, or maybe you have any questions for Igor?
Yes.
While he's still available.
If you have any questions,
Somewhere. I actually with methodology, you mentioned the floor at 0.5.
Yeah.
Does it mean so? Probably not loud enough. On the methodology, the floor you mentioned is at 0.5. If an underlying is below that, is it weighted up or does it fall out?
Fall out.
It falls out. Okay, that was my question.
Yeah.
Well, I wasn't sure about that.
Yeah. The cap is 15%, and then everything excessive weights are redistributed to others. So yeah.
So if you do an ETF eventually based upon your index, are you gonna do ETF for your institutional partners?
Institutional partners, we directly can.
We will not. We can, but we will not.
I stand correctly, we can, but we wouldn't. How are you dealing with the custodian from cryptocurrency? For DTF specifically is a team behind Coinbase or that is working Coinbase. So there's custodian and market maker involved on the back end, which are basically partners, beta partners or from research team. And I not only to name them specifically, but this is in compliance with US regulation at the moment. So yeah.
Yeah, I can add something. So if somebody wants to build a product and doesn't have a MiCA-regulated custodian at hand or a MiCA-regulated asset manager at hand, we can provide that from our network and make suggestions. But we're quite boring, right? And we would go to those that are old, stable, and really, really solid. Maybe not the cheapest in the market, right? But those where we can really trust, like Bitcoin Swiss, for example, right? As they happen to be in the room. The 21 shares doesn't have the problem, right? They have everything they need, right? But there's others, like let's say a small bank in Austria. If they want to build a product, they need us, to bring them to certain departments that are regulated, so that they only do the security and just the market making for the security on the stock exchange, but no headache below the surface, right?
Any other questions? Everybody's ready for another break?
Yeah, actually,
Alright.
everybody's leave.
Hi. At some point you said that you outperformed Bitcoin at some point. What was the return and what time frame were you looking at?
I'm not sure I understand the question.
You said earlier that you outperformed Bitcoin.
Yeah, over the last 5 years, there were a lot of let's say points in times where we outperformed Bitcoins for over 2 or 3 weeks or 2 or 3 months even. What I've shown here was the snapshot for the last 3 years because the chart is too big. But you have the link and you can examine that by yourself because you have the ability to download the full data and just compare that so everything's published. But 3 years, 5 years period, there were many, let's say, points in time where we outperformed Bitcoin for a certain period of time.
And I saw 60% return. Is that how much the fund performed?
Yeah, exactly. The base value is 100, so we started at 100, and currently it's 1,600%, which means return on that is 1,500% for that.
Okay, I understand. Thank you.
Yeah.
And I think if that was it, enjoy the break and we'll see each other again at 2:30 p.m. in here.
Thank you, guys.
und so weiter.
Ja, okay.
Dann ist die Hauptarbeit, die nicht schlecht, was ja durch den Leuten Danke, das ist ja auch nicht das ist schon mal gemacht. Als Terminologie hat, das geht das, aber die Welt vorstellen, dass das Thema durchnehmen. Ja, die muss halt sorry, what has he? Ja, da gab es viele Pläne damit, weil es waren da so dann, ja, was ist das? Vielleicht in der Hand, das in den weiter. Im Namen der ja, weil du halt groß drauf sein musst. Das halt jetzt echt weil mit dem ist aber ein Sammelloch machen oder was auch immer. Auch das ist jetzt so, dann auch das was oder war das live, alles weiß einfach nicht so. Das checkt ja, was die machen, das ist dann wieder sehr gerne. Die machen einfach Spaß, einfach das ist einfach eine Plattform, wenn kannst du tolle Podcasts kennen, oder Basket oder Launch, du läufst das Problem ist nur für die Blume, was dieser Modell ist, die ist so, das Schwierige ist nur, dass wir haben Zahlen, also wir kommen in den Bad. Dieser Influencer, die habe ich so die Zusammenlage, das ist so ein bisschen so ein Bescheid oder so ein und sie liest zwar auch hier gegen aus, dass vielleicht aus ihrem Grün ist, sondern alle, der ist halt okay, dann muss man jetzt weiß ich nicht. Was das sind, die ja, so ist Fokus sind einmal die Portale eine E-Mail beginnt, habe trotzdem ja das war da ja selbst da gab es schon so diese ja auch so ist das ja ja, diese ist ja, lange davon Zeit für die hat auch ist ja promoted, das ist ja nicht tokenized für eine Boundary. Du hast genau Product People like you do much different products, standard, very products. Yeah, we can just that's what I got the box. But the reserve, that's issue tokenized. With the token, it's a token, and you need to learn roughly it's in all of them. It falls for everybody, and smart is I there whatever. So they will put it nice in facilitate the security on top of it, and then the cheapest never. And ETF law is one of the orders as one or replicating an index using and security. So you are no I have one to ask. Yeah. We don't really basically that's how I can do that as well. Or a bank, and then you could easily do that. No, I don't know. Yeah, because it's is this a part? Is this a part of like the I think it's master, and it's reachable. This is They apply, they want to put this for the other products that they find out, but the products must earn back money. They must be compliant, they must be liquid, right? And they must be they must pass the product check of the bank, right? It's extremely easy. And when it's some sort of product with some sort of risk, you don't have an idea how to make the agents. No chance the bank will sell the company because they cannot sell the something they don't have exactly. This is a full extent. It's full extent. I put it in right and then my clients to LTT Venionaire layer one products. Right? And I put it in on their account. And I side for years. Right? And last year, they put some many funds on top or not. Yeah, but the other ones, right? Okay, so you market it to the private banks that are empowering the family offices. Right? The only marketing goals for private brokers, wealth managers, banks, and we don't feel. Look, we don't feel outside. We only encourage the partners to approach in top of our thinking. That's really correct. Yeah. Index is in our data. Yes, also is so you mentioned that. What about one of the so we go to down part of the loans and then I decide like maybe you are more aggressive for scaling of because you believe that's on the sector. Well, the product already. The cool thing is one index can be replicated on 1,000 stocks. Let's up since the evening. Almost funny that the Australian marketing effective running a product, everything. We are afraid, but there's people that are people families, they are good to allocated, and so serving their minds and make all that. You let them do their thing. You're brown and we just do the apologies. Business uses time. I mean, it's also especially often that who are high only products where this or tokenized the you don't buy anything well, which is creating the brand intelligence provide data and then our product targeting and helping it and loyalty like based on the data but you could also be a software provider, let's say a portfolio management solution as somebody has their own trading or fund or multiple funds they're invested in and they want to benchmark, so you want to offer them a benchmark so you can ask to trust yours a month and then matching them what is the license and the key correct. Yeah, that's what I was looking at. Yeah. Okay, so the reserves are the reserve guys. That's great. They trade as not in your and yours body. Not in your day in the day of the guys to lock in. There's building products and offering for the license. We are a lobbyist provider. We tell them how to allocate funds. This is the lead for all of the products.
changing that from it's very simple. I only have like one moment, right? So the moment you outline, university project, yes, so because they are first another one behind. They have the fund managers, they have asset management, they have law, writing, finance, and that's and it's just from the university in York, right? And this page was about benchmarks, yes, how the managers and this was my professor, right? Was listening to from university. Was sitting there, so most of it's not really most investing in the portfolio because the kind of feels better that even the rest you can now that this doesn't work and you cannot beat the bench. So we need that extra what that's on us. And tell all of them that 90% of the 95% of the assets flying around are just bullshitting. Because yes, create a narrative, it just offers and nothing complicated. It would say why do you have